I know we only got through Ethereum on that first video, but we're going to try to make it through Bitcoin and some others on this video. I think Matic and maybe Avalanche, I don't know, we'll see how much time we have, but yeah, we're going to keep going through that manipulation, consolidation, distribution, because, well, that's really all they got on us. And don't forget to like and subscribe if you like what I do. Let's move on to Bitcoin really quick. I know I'm trying to get through these as fast as possible so we're not so bored. All right, so same thing here. All right, so you can see it. You can see the, well, right here's the manipulation. Well, distribution right here. You had the three drives, 1, 2, 3, and then all of a sudden, boom, manipulation. And then consolidation, and then boom, distribution again. Manipulation a little bit, tiny bit of consolidation, boom, distribution. And then, ever since then, manipulation. Right? And that manipulation has been going on for a while. I mean, we had manipulation until about right around in here. And then we had a little bit of consolidation. I had a tiny bit of distribution. And then it was like, nope, boom, manipulation again. As soon as they thought you had, and they had me too. There was times when I was calling, hey, this is actually going to go higher, because I was looking over at the left side of the chart. That's where I always look. I don't, look at trend lines. I don't do the bear, bull flags, anything like that. I look at the left side of the chart. What is happening on the left side of the chart? Because that's what price remembers. Price will remember whatever has happened before, at that same price. It'll try to react off of things like that. Now, whenever you have something like this, a huge tail down here, that just means that there was a big liquidity run. It just means that anybody that was trying to either go long, probably right around in this area, where there would have been, like a fair value gap, or not a fair value gap, but a bullish order block. People that had short stop losses set, and then of course it would have just drug right down through them, took them out. If they weren't paying attention, if they weren't judging this very well, and then boom, and it just takes them out by driving this down. Now the thing is it didn't get below this red candle, so that just means it still acted as a bullish order block. So it did act as a bullish order block, and then pushed its way back up. Once it pushed its way back up, unfortunately, we did have, and you probably can't see it in here because I have so much crap in here. There is a fair value gap right in between here. I can probably get rid of this guy right here because I don't think it even matters anymore with that one. Or that one, or that one. I'm just going to get rid of those. But what we did have is we had this, right? And because we had that, each time it came up into it, boom, it got rejected. Boom, rejected. Boom, rejected. Boom, rejected. So we have 3 rejection points right here, which means that the next time that this is actually going to come up into this area, it's not going to get rejected. So that is another good point, because the price is going to remember what happened at that area at that last time. Now, it may get a little bit higher and get rejected, such as, maybe the top of the fair value gap. But still, it's not going to get rejected by much. It may just pull back and then fill in the rest of the fair value gap and then move on once it gets up there. But until then, we still have to deal with all this stuff that happened down here. Now, what I saw down here was what we call seek and destroy. Now, what is the seek and destroy? Seek and destroy is where you have two areas of equal highs and equal lows, kind of close together, right? And so you had these and this is part of the, so that this is definitely the manipulation part, right? Manipulation, right? So now that we're consolidating, we had to consolidate sideways. Guess what? We had a lot of highs that were, when you say highs, but they were all equal. And then we also had kind of the same area for lows. So what happened there? Well, people probably thought it was going short. So since it was all those highs that were sitting right there, and what I can do is I can put a short position on here. What people probably did is that they thought, all right, there we go. And this is what people usually do. They say, oh, well, it's already hit that a couple of times. I'm just going to go ahead and try to enter and put a short stop loss. And then what does it do? Boom, kicks right through it and kicks them out. So that way smart money knows that, hey, they're probably going to try to go short. They're probably going to have a short stop loss. And this way it comes in. And then once it comes in, it hits that short, sell limit, and then that brings in the liquidity into the market. And once that brings that liquidity into the market, then that's when the whales, the people that have all the money, they're going to push it up even higher and take out all those stop losses. Or what are people going to do? They're going to second guess that. They're going to second guess, oh man, I should have went the other way, and they're going to stop. They're going to get rid of their position, and they're going to buy. Right? And then as soon as they buy, what happens is that the whales, the people with the big money, they take it against them. So you're screwed if you do, you're screwed if you don't. So whenever you see these equal highs and equal lows together, just know that more than likely it's probably going to try to take out both ends of those. Right? So boom, came up, it tried to take out anybody that was trying to do one of these numbers here that I have this, short, ratio on. And then the same thing for the long. So people probably thought, oh, well, since it was only getting down through here, I'll just, put in one of these. And then this looks like a good safe spot, for resistance or whatnot, and they're not actually looking at what is actually happening. Now, the reason I left this here was because, of course, there's a fair value gap over here. That's why it went all the way down in here. It really almost had nothing to do, kind of had something to do with people probably thinking that it was a support area. But that's the manipulation part. The manipulation part is to make you think that it is going to be a support area part, when nobody looks at the fair value gaps. Nobody thinks about the imbalances that are in there. And so since nobody thinks about the imbalances that are in there, that is part of the smart money way of acting. They'll manipulate it to where you think that, it's a double bottom, right? And how many times have you done a double bottom? Probably a lot, right? How many times have you got screwed out of a double bottom? Probably a lot. Exactly. So, and this is why. And this is exactly why. Because it's not because it's a double bottom that's the retail way of thinking. And the retail way of thinking is not the way to go about things. You have to look at other factors. You have to look at what happened on the left side of the chart. You have to see if there was a fair value gap. You have to look and see if there was a bullish order block. You have to look and see if there was a breaker, things like that. All those things come into play, right? And it's not just what is happening right here. This is just the distraction. What's really happening is over here, right? That is what is really happening. That is where they're going to get you, okay? And so that's why we call it a seek and destroy, because it took out both sides of the market. Okay, so now we did hit this bullish order block, and again, halfway through, again, a weekly fair value gap. I want to say that if I go to the weekly, that was a weekly fair value gap. Maybe not. I'm not for sure what that was. Maybe it was a 4-hour one. Who knows? I'm not for sure. Maybe it was a daily one. Who cares? Either way, there was some reason I drew a rectangle right there, and there was definitely a fair value gap right there, and you can see it right, right there anyway. Boom. Now we're going back up. We were going back up, and now Bitcoin seems to be dropping down again. Now the question is it going to be dropping down in here? That's the question. To be honest, I don't know. The lowest I would expect it to get would be 28. Now we've already been through this part back in July, and that's when it filled in that monthly fair value gap for the third time, and then boom, it took off. I just don't see it doing that again. I don't see it coming. I mean, it may enter, that same fair value gap, but I don't see it coming down and actually entering this fair value gap. We haven't hit this fair value gap yet, and to me, that's a good thing. Not all imbalances have to be hit. That's just not a thing. It's not going to try to seek out every single imbalance that is in the charts, but just be wary of when there is an imbalance in the charts that it could come back. Now the thing is, I'm looking at Bitcoin here. We got the seek and destroy. Now what I see is these red candles, these 3 red candles going down, but I also see 1, 2, 3 green candles and closed above them. So to me, this seems like a bearish chart. That right there broke market structure. Breaking market structure, boom, goes all the way back up. Now, what did it do? It hit a bearish order block. That's what this red line is. Now, why is it a bearish order block? Because there's a green candle right here that goes up. It's the last candle that goes up before candles go down and close below it. So therefore, that is your bearish order block. So when it comes up to that point next time, boom, that's when it's going to meet resistance. This is technically your resistance area. And of course, gets a little bit more than halfway up into it, pulls back, and then almost fills in this fair value gap. All right. And actually, there, like I said, this is another reason why I think things are good, because it's barely entering into these fair value gaps that are on the lower side whenever they're trying to push up further into the fair value gaps that are on the upper side. So I see this as a good thing. I think that we are starting to finally pull out of this. Don't quote me on that, but that's just the way I'm seeing this. I'm seeing the break of market structure. I'm seeing, all of that. Now, who knows? Right now, we do have 2 equal lows right here. We could see this thing pull down all the way back down to here and fill in this fair value gap. That's a very good possibility. It could come back down to, 34,000, 350, something like that. Okay, if it does that, we're going to see if it bounces off of this fair value gap, or if it's going to try to push even further down. If it pushes even further down, then we have to keep watching, and see if it's going to bounce off of this fair value gap. If it doesn't do that, then we got to see if we got to take things one step at a time, right? So that's what I try to do. I try to make sure I'm taking everything one step at a time. I'm looking at everything very, very closely, just to make sure that we are not trying to jump ahead of the gun and try to think that we're oh no, this is the end of the world. No. There's so many people out there like that it drives me insane. You have to look at the positive of things, and plus there's so many institutions that are involved in Bitcoin and Ethereum, things like that. Like right now, there's no way in heck they're going to let this get too low, because if they let it get too low, everybody's going to jump out And then if everybody jumps out and then they're the ones buying it all up, it's still not going to come up that much. They need retail support for it to continue to move in the direction they want it to go. So they're not going to try to scare you the heck out of you that much. They're just going to try to scare the heck out of enough people to jump out so that way they can buy enough at a very cheap price. Got me? Okay. All right, let's move on right along. I'm going to take a look at Lunaterra. Or Terra Luna, what do you want to call it? Now, Terra Luna, this did seem like one of the more stronger charts whenever I was first looking at it. You do have it. Well, that did not mean to happen. You do have this coming up here before it pulls back, right? So you have the distribution, you have the manipulation, consolidation, and then distribution. And then once it gets to the distribution, what's it do? Pulls back and touches the top of this line right here. That is your bullish breaker. Now, bullish breaker basically means that, so you have to have a low, a high, and a lower low. I would count this as your low, right? High. And then this probably got just a little bit lower than that. So low, high, lower, low. And then after that, boom, runs above it, comes up. And now that acts as support. That is what is going to act as support. Not two double bottoms or two double tops or anything like that. It's going to be the breaker. The breaker is going to act as support. So boom, it does. It goes boom, boom. There we go. Bounced off of those, and then now we have more distribution. And then this is when Luna was on a tear, and even though it did have this weird little spike, just a liquidity run. That was anybody that was trying to go long, that was dumb enough to try to put a very short stop loss on it. They got knocked out. That's exactly what that was. The smart money people know this. They know they're going to try to follow it close behind. So what do? They just sell a bunch of it really quick, and then they buy it back up to take a lot of people out. And they take their money by doing it. So this pulls up, pulls back, and then the same thing, right? We pretty much got the same thing that we had before. We have another breaker. So you have this, and then you have the pullback, and then you have the run up. So this distribution, except for stopping here, it actually ran through it. But once on the other side, it actually did stop there, right? So that would have been your last up candle, right? So you'd have had a low, which you could count these guys right here as lows, to be honest, because those are the last two lows before this high. Low, high, lower, low. Easy, boom. That's a bullish breaker. You can draw a line right across that anytime, and especially if on the opposite side it runs right through it, that means it's more than likely going to try to stay on top of it, right? So moves up here, we get to the high, pulls back just a little bit, and then now we had this fair value gap. Well, it was a fair value gap here. I extended it just to see what would happen. Of course, you have this part that comes up in here, and then I think that's more of a bearish order block than anything. So if you were to see that last green candle right there, those two green candles right there, that went up and came down and closed below those candles, that created a bearish order block. And of course, these come up here and they hit this one here. So there we go. So here's your green candles up before your red candles come down and close below it. So then your green candle comes up, hits it, and then turns around the other way and closes below it. Your green candles come up, hits it, and then your red candles go down, close below it. Kind of repeat thing until we get to what is called a PD array, a premium discount array, right? Premium discount array will fall in the form of a fair value gap, a breaker, a bullish order block, things like that. It'll keep doing that until we hit a PD array. Now, what did it do? It actually came down and filled this. I think this is a lower. I'm not for sure. I don't think I'm putting. Oh yeah, it's a positive order block. This would have been a bullish order block, right? Because it would have been your last down candle before your up candles. So draw that all the way across, comes down, hits into the bullish order block, gets to the bottom of it, actually hits at 61.8% before it comes back up. Boom, again, hits the underside of the bearish order block, moves down, comes back up. What does it do? Boom, hits the bearish order block again, drops again, and then now we've already been through this one, this PD array. So what is it going to try to do? Try to find another one, right? And so here it comes back down, hits the bullish breaker. Okay, it remembers this one, so then it goes back up. And then, of course, that's when it's going to try to find another PD array. It's always trying to find PD arrays and imbalances. This is always what it's just trying to do. So boom, comes up. You see here, you can see a fair value gap right here in the 4 hour. So enters it, pulls back a little bit, pulls back up into it, fills up the fair value gap, and going down, pulls back up, fills up the fair value gap, and then here comes the manipulation. And manipulation pushes it back down. We get down to the breaker. Boom. They try to manipulate you into trying to think it's gonna buy, and then as soon as you do, boom, they go against you, right? And then they go against you, and they go through this fair value gap, inside the fair value gap, and now they're dropping it again. Now, where's Terra Luna gonna go? Here, I haven't put it right here. This is the smart money pullback buy area. So anywhere in here, more than likely, is where they're going to go. I have a feeling this is probably one of the lowest places it is going to go, because if you look to the left, you see the red candle here. That's your last down candle before your up candles. Now, the thing with these is that it's the last here. You can see this one's higher, right, than this one. I'll get close up on it. You can see that this is higher. These are higher. All of these are higher than this red candle right here. This red candle right here. All right, so this red candle does come down, and it does hit right there, your bullish order block, and turns around and goes back the other way. And then it breaks these highs. It breaks all of these highs. And as soon as it breaks all of those highs, now you've broken market structure. Now, when you break market structure, now you're expecting higher highs, right? Because it's not staying below, the highs that were previously made. How do you know if it's going to do that? Something you just have to kind of train your eye to sit back and watch and understand, especially when these highs are almost about the same height. More than likely, yeah, it's going to try to run the highs and then almost pull back as if it's going to drop again. And then that's when people are going to try to chase it south, and then it's just going to run up again. And that's why I wanted to get a really close up on that so I could show you that. Now, the thing is that we have pretty much equal lows coming up right along through here, right? So let me get a trend line here going. Take this off just a little bit. Okay, so now there's liquidity resting below this area right here. So that's what this area is right here. This is your liquidity area, meaning that there are people that think this is a safe spot. I think this is a safe spot for support. So they think this is safe for support, right? And that's what makes me a little bit worried about this coming back down into here, because I have a feeling it might try to drive down up underneath here even, but we won't know until we get there, because even that is basically equal lows. You also have this that's almost equal lows, and then I mean there's quite a few of them all over the place, to be honest. There's more right here. But the thing is that I mean, Terra Luna has been on a tear, and I don't think we're gonna see it get back. I mean, yeah, it's pretty low right now. I'm not gonna lie, at some 40 something dollars. I just don't see it getting back down to the 20s right now. I think it's pretty much to me. I think it's almost at its lowest point. It could again get just a little bit lower, but I don't think much lower than this before it turns around and goes back the other way again, or at least consolidates. It at least consolidates in an area right through here for a little while before it does finally, pick up and take off and go somewhere. Let me see what is on the daily to see what kind of fair value gaps we got going on here, and to see what kind of imbalances it's going to try to fill. So it's already filled that one. So since it's already filled that daily fair value gap, and we have we have kind of a consolidation area right here. And again, you also have to think about the market maker buy or sell model. I don't know if you guys ever heard me say that before, if this is your first time watching my videos, but if not, you have to see this. Market maker buy, sell. And the first picture that should come up should be from Inner Circle Trader as just a basic diagram, but then there will be other pictures as well that kind of show you exactly what market maker buy sell model and what it looks like. Okay, so this is the diagram of the market maker buy sell model. This was originally brought. This idea was brought to forefront by the Inner Circle Trader, who's my mentor. And this is technically a buy program. And the reason it's a buy program is because if you look on the left-hand side of the chart, it's a little bit lower than whenever you go down and then you go back up. The right-hand side of the chart is actually a little bit higher. So that's why it's called a buy program, because it ends up being bought a little bit higher than when it originally started, and it's because that it's been manipulated to the point to where it'll sell to get the retail traders to be scared, and they'll sell off, and then after they sell off, then they'll buy it for cheap, and then they will raise up the prices, and then they will just continue doing so. And that is not just the only example that we have of this, not just just a diagram of this. There's actually real world applications of this. Let's see if I can find one in here really quickly. Here's one right here. This is actually my second go-to whenever I pull up a. So you can see here another buy program. So you can see, just like it was in the other diagram, just a little bit different. Starts here, goes to a little bit lower, hits the bottom, comes up a little bit higher, and then it ends up all the way higher than the one on the left. So another one that is called the buy program, that would be for the market maker buy sell model. Now, this is not Wyckoff. A lot of people want to say this is Wyckoff, and this is not Wyckoff. And the reason it's not Wyckoff is because Wyckoff had a pattern for only just accumulation and distribution. He had nothing that had to do with manipulation. Now, his ideas did call for someone that was an operator, but he didn't really go into detail as to where the operator was or how the operator had any kind of influence on the market. Thanks for watching, and remember to always wear your pants, guys.